AMD is currently trading at $78.96 a share. Its market cap is $95.88 billion with a PE ratio of 38.26. It's down from its 52-week high of $99.23, but up from its 52-week low of $48.42. Over the past 6 months, the stock has pretty much traded sideways. Not much action. It's down about 0.5%, almost perfectly flat over the past 6 months. Over the past year, it's up 41%. Past 5 years, up 1,800%. And if we go ahead and look at the time when Lisa Su, the current CEO, took over, which was actually on October 8th, 2014. And this chart is a little off since it says October 24th, 2014. When she took over, the stock is up over 2,800% since then, with an average yearly return of over 100%. That's pretty incredible. However, in today's video, I'm going to talk about why AMD will go to $100 per share. This is the AMD stock analysis. I'm your host, David Scheuer, and this is StockerFinance. Follow me on Twitter at StockerFinance for more information. Also, subscribe to the once per month newsletter. The link will be in the description below, and I'll talk about that more at the end of the video. So let's go ahead and dive into some of AMD's fundamentals here. We're going to use hypercharts.co. That is the charting software. It's free. It's awesome. Hyperchange is the YouTuber who is one of the co-founders of this company. Really awesome. And it's great for YouTube because the graphs are so easy to read and look at, especially for people who maybe don't understand some of the more technical fundamentals or have trouble reading a balance sheet, income statement, etc. So the revenue as of the last quarter was $3.24 billion. If we go ahead and look at their margins, they rapidly increased to 54%, which is really, I think, what is going to drive AMD to such high levels of success. They're just improving their margins so much. If you look at all three charts here, their margins have been improving on all levels. Their gross margins continuing to improve, operating margin and profit margin just skyrocketed last quarter. And I think they're all going to continue to rise as AMD really fleshes out its system, as well as the Xilinx, hope I'm pronouncing that right, as well as that acquisition will improve their margin and bottom line as well. Their net income shot up to around almost $1.8 billion in Q4 2020. On top of that, their expenses, their operating expenses, which is mostly R&D expenses, those did increase, but again, they're not increasing as fast as their revenue is increasing. You can see that here, the revenue growth at 52.52% and the operating expenses year-over-year growth at actually around 45-ish%. 46.59% to be exact. So revenue year over year is growing faster than operating expenses. That's always a good sign for this company's health. If we go ahead and look at their cash on hand at $1.595 billion US dollars, not a ton on cash on hand for a company worth nearly $100 billion, but still a significant amount for them to feel comfortable. And as an investor, I feel comfortable with them having that much cash on hand, especially as a safety net. And let's go ahead and talk about some news here, and let's talk about some justifications for why I think AMD will reach $100. First off, let's talk about their 2021 results, which are set for April 27th. I was looking at Q4 2020. However, the results are so soon that all these numbers and this entire video's thesis will really change over the next few days. And I'll actually go ahead and make another video after those results come out, and we'll see if my thesis remains incredibly bullish, or maybe if I have to go ahead and reassess my analysis on this company. But the company projects first quarter 2021 revenues to be around $3.2 billion, plus or minus $100 million. Robust sales across all its businesses are likely to drive a year-over-year increase in revenues. On a sequential basis, revenues are expected to register a decline of 1%. The Zacks consistent estimate for revenues is pegged at $3.21 billion, suggesting growth of 79.5% from the year ago quarter's reported figure. All good signs here. Revenues to be around $3.2 billion, plus or minus 100. That's incredible revenue right there. On top of that, I would love to know what their estimates are for their net income and how their margins will change, but we really didn't get that much information on their guidance. If we go ahead and compare this company to other companies, especially its PS ratio and just overall sales. This is the 2022 estimated sales. AMD at $15.7 billion. And Intel at just a whopping $72.3 billion, Qualcomm $33.4 billion, and Nvidia $24.9 billion. What we're going to find here, though, is yes, you can do a ton in sales, but that really doesn't matter if your margins are incredibly low because your net income will be significantly lower. AMD, Nvidia did $24.9 billion, but as I'll look at a chart later, you'll see that AMD actually made more in net income last quarter, despite Nvidia doing more in sales and revenue. AMD did less in sales and revenue, but their margins are so so high, they're able to bring in more net income at the end of the day. And that's really, as an investor, what I personally look for, not just how high the revenue is, but really how high their margins are and how much money they're actually being able to put in their bank as profit. So if we go ahead and look at the PS ratio, which is the price to sales ratio, AMD's at 6.3, Intel 3.6, Qualcomm 4.6, and Nvidia 15.5. So significantly below Nvidia, but about double that of Intel. If we go ahead and look at some products that are coming out, this is another reason I'm very bullish on this company with how much new the new technology coming out, not just for Nvidia, but the entire chip sector as a whole. And that is one of the risks for investing in Nvidia. And that could be one of the more bear cases is what if, let's say, Nvidia comes out with all these new products or Intel that are really competitive with AMD and ends up knocking AMD down a few notches. That's going to hurt AMD's bottom line significantly, as well as its revenue and its market share. Intel already took back a slight, very, very, I'm not going to say a lot, but a very minuscule amount of market share from AMD. And AMD's continuing to take market share, but that little reversal there was kind of a sign to say, oh, okay, what's going on here? AMD really needs to have their next product be a hard hitter to really just go ahead and establish itself as a strong man among these other large companies. We can go ahead and look at some of the AMD products coming out here. AMD Ryzen 5000G APUs for desktop. You have AMD Lucien, I'm not pronouncing that right, so I'm not even going to try to pronounce it, Zen 2 APUs. We have some others here as well, AMD Zen 4. So you can look through the technicals. If you're someone who's really into computer graphics and someone who's really into building your own PCs, this information will probably be very interesting for you. But yeah, we can just keep moving on here if you can read through it if you want to. Get the AMD Radeon RX 6500, AMD Radeon RX 6000 for mobile, AMD mining GPUs, AMD Radeon Instinct MI200, AMD Navi 31. On top of that, let's go talk about their deal with Xilinx Corporation here. So AMD reported a $35 billion deal to acquire Xilinx, and that actually was approved by shareholders of both chip makers. That's a really good sign, so that means this will go through. On top of that, if we go ahead and quote the company, they said the acquisition will bring together two industry leaders with complementary product portfolios and customers, and the move combines central processing units, graphics processing units, field programmable gate arrays, adaptive systems on chips, and deep software expertise to enable leadership in computing platforms for cloud, edge, and end devices, they added. On top of that, AMD and Xilinx plan to capitalize on opportunities spanning some of the industry's most important growth segments. This includes data centers, gaming, PCs, communications, automotive, industrial, aerospace, and defense. I actually think with the rise of electric vehicles, automotive is going to play a much larger part than it previously has in this entire sector with semiconductors. You have tons of Teslas all needing chips. On top of that, you're going to have lots of other companies coming in right now trying to produce, or also just Legacy Auto really trying their best, I could see. Watch my last video for my opinion on Legacy Auto and Tesla, but this video is not about that. My point is that all these new electric cars are going to be more advanced, going to have more, self-driving software, going to have more technology. It's going to require new chips. And AMD and Xilinx, once they're combined, are going to be able to provide that. On top of that, you do have competitors that are going to be able to provide that same service, but I believe AMD could capitalize on that segment more if it wanted to. Now let's go ahead and go through my justification for $100 per share. You see, that really just sounds kind of like an arbitrary number to a lot of people. But here is some reasons why I justify $100 per share for AMD. Number one, improved margins, significantly higher net income. Their margins are continuing to improve. We're really going to see their gross margin take off here after the Xilinx merger as well. Positive 2021 and 2022 guidance by them. That signals further rapid growth. So, one thing about AMD, it's very highly valued right now. And as a fundamental or value investor, you probably wouldn't choose AMD as your first choice to invest in by any means. But the good thing is AMD's pricing in future growth, not its current operations. That's similar to a lot of tech companies in general in that whole segment here and the semiconductor industry. We really see that strongly, though, with Nvidia and AMD, who are just very popular hot stocks in general. But on top of that, we're going to see the Xilinx acquisition will allow for greater competitive edge and especially distribution. Demand remains incredibly high for chips, currently trading at $79 per share. That's a 21% increase to reach $100 per share. AMD's has historically returned 103.4% 21% over the past 6 years. So a 21% increase over the next year is entirely possible. In fact, that'd actually be less than their average historical return over the past 6 years. New product launches, increased gross margin and profit margin, Xilinx acquisition equals expansion. Just a lot of stuff there that I'll go ahead and just rant off really quickly that'll justify this 21% increase. On top of that, the overall semiconductor industry growth. So the overall semiconductor industry is expected to reach $726.73 billion. That's by 2027. I actually believe this is a very conservative estimate. I think it could be higher. I think it'd be closer to $1 trillion market by 2027, just based on how advanced our society is growing, as well as not just the United States, but the entire world is advancing so rapidly right now. I could definitely see the semiconductor industry growing significantly beyond around $700 billion by 2027, maybe more towards the $1 trillion mark. When you compare this to Nvidia, AMD appears slightly undervalued, actually, which is kind of interesting. And I want to go ahead and take a look at this, and I want to see mostly if you guys agree with me. If you agree with me when comparing to Nvidia, let me know in the comments. If you completely disagree with me about any of the stuff in my thesis here, go ahead and drop that in the comments below. I'd love to see both sides of the argument. Just do so, back your argument up with evidence and stuff like that. Anyways, let's go ahead and look at some Nvidia's fundamentals so we can compare it to AMD. First off, let's look at their revenue. So Q4 2021, they did $5 billion in revenue. If we go ahead and look at AMD's last quarter, they did $3 billion. So AMD's previous quarter, they did less revenue in total than that of Nvidia. But if you look at their net income, well, Nvidia actually did less at net income here, just over $1.4 billion, compared to AMD, which did almost $1.8 billion in net income. And that really has to do with their margins. You know, Nvidia has margins of 29.12% as of its last quarterly report, but as of AMD's last quarterly report, their profit margins were up to 54.9%. Now, Nvidia's gross margin does remain significantly higher compared to that of AMD's, but AMD's is trending in the right direction, continuing to increase their gross margin and their operating margin, and especially their profit margin. If we look at cash and short-term investments, this is really where Nvidia starts to kind of waver off from AMD in terms of just its assets. So Nvidia has $11.5 billion in cash and short-term investments, but AMD only has 1.5 or almost 1.6 billion in cash. I don't believe this is including short-term investments though, so this may vary a little bit. I didn't realize that wasn't included in this chart here, but either way, you know, at the end of the day, Nvidia is worth $37.1 billion, while AMD is worth less than $100 billion, despite AMD doing more in net income, having higher profit margins, continuing to grow, continuing to release new products. You know, Nvidia's PE ratio is 86, incredibly high compared to AMD's, which, yeah, it's high. It's at 38, but still for the industry, at least AMD's is more closer to that of Intel's and other competitors, whereas Nvidia's is really just out of proportion here. So either Nvidia is way too overvalued or AMD still is, you know, I guess you could almost say undervalued, which is crazy to say for a company with a PE ratio of 38 and a market cap of nearly $100 billion. But still, I could see the growth for AMD reaching $100. That's not that much of an increase for a company that's historically had 100% average yearly return over the past 6 years. For a 21% increase to hit that $100 mark is not unrealistic, and I completely see that happening in the near future. And to be honest, I could see that happening by the end of 2021, depending on multiple factors in the semiconductor industry growth. On top of that, we're going to have some other things going on, some geopolitical landscape type of stuff. But anyways, we can talk about those specific instances or specific news stories in a different video. For now, though, I hope this brief analysis just gave you an overview of some of my justifications, some of my reasoning for AMD hitting $100 a share in the near future, especially when you compare its fundamentals to that of Nvidia's. And on top of that, if you just go ahead and look at its new product mixes coming out, if you go ahead and look at just AMD's impressive margins that are continuing to increase, its bottom line significantly raised with the acquisition of Xilinx. That's going to massively increase their distribution network as well as improve their margins and just their overall ability to innovate. It's going to give them a huge competitive advantage there and is really making AMD one of the big players by acquiring Xilinx. Now, I wouldn't be surprised if we see another acquisition, not necessarily in the near future, but at some point in time from AMD to continue to grow their business. And again, I just want to compare Nvidia to AMD here. Just a market cap of 95 compared to Nvidia at 371. To me, that seems a little absurd. I think those market caps should be significantly closer to each other. You know, AMD again did more in net income last quarter than last quarter for Nvidia. And again, this could all change. You know, on the 27th, that's only a few days from now. 5 days from now to be exact. I'm recording it on April 22nd right now, and their earnings are April 27th. it's going to be really interesting to see what happens. I'm probably going to have to make another video and completely reassess my situation. But for now, I won't be surprised if they have really positive earnings. Unless something drastic happens, I believe my thesis will remain exactly the same. But I'll probably still make another video anyways, just covering more topics surrounding AMD. Anyways, guys, thanks for watching. Please subscribe. Twitter, you can go ahead and follow me at StockerFinance. Great tweets over there, great information, market news, etc. Check out these videos here. Make sure to watch some more content. Definitely helps me out. And I do have some pretty entertaining videos, I hope. Also, go ahead and subscribe to my newsletter. I'll leave the link in the description below. It's a once per month newsletter. It's not going to fill up your inbox, only once per month. What I do is I go ahead and I analyze the market. So I give a market report. I also give a written report of a stock that I'm interested in or multiple stocks that I'm interested in. And on top of that, I just give general investing tips and tricks for those who are new or for those who have been investing for a long time. This newsletter will definitely help you out. All it takes is your email and your name. That's it. I'm not going to spam you with anything. I'm not trying to sell you anything. It's just a newsletter for fun. Anyways, guys, thanks for watching. Please subscribe, and I'll see you in the next video. Peace out.